Hey everyone, welcome to episode 9 of Direct Stock Investing series. How many of you had sold your shares during the recent market crash? I'm shooting it on 14th March, Saturday. Yesterday, I'm pretty sure that what happened in the market was something that's not going to help all of us, right? Investors. It was a brutal sell off, broader market sell off, almost all the indices across the categories, right? You take any sector, all the stocks from all the sectors crashed during yesterday's market sell-off, and I'm pretty sure that the portfolios might have gone down 15-20% at least. And war is going strongly between US and Iran, Israel and Iran, right? And things are not looking great is what we can see at the moment. So the problem with investors like us is that we do get panic, which is natural, and though we might have bought the stocks with good fundamentals, because of that panic we tend to sell, right, during crisis like this. But that is something that we are going to discuss, where this is the you know bad time to sell a stock, especially when you had good conviction on the stock. So let's discuss about that. I so in during my last video we talked about how to build conviction whenever a crisis comes, and in this video let's talk about when to sell a stock, right? The stock selling decision. So what I have to talk is already talked about in a lot of ways by different investors, and what impressed me the most is the comment by Rakesh Jhunjhunwala when the reporter asked, when will you sell a stock, right? So there are YouTube videos where he used to tell when he sells a stock, under what circumstances he sells a stock. So he talks about 3 points, and pretty largely that's the same thing even I am also following, where those 3 points that he mentioned still holds true in the current circumstances. I will talk about it shortly, but before that, when to sell a stock, it's important to address the question when not to sell a stock. You should not sell a stock during certain times, right? So one is especially when the market is crashing and panic selling is happening. You are also thinking that your stocks also will be beaten down, and because of that panic you tend to sell. But that's a very bad time to sell a stock, right? So that's the worst time to sell a stock, when because uh, we investors goes through difficult situation all the time. Markets goes through difficult situations, and because of markets we investors go through hard times. But as an investor, what we have to learn is that you need to have that courage to hold stock, even when things are going against you, right? Even when things are going against the, the stock that you had purchased. So panic selling is not at all good, and you selling your stock during such times is the bad thing, right? You should never sell. Of course, if the fundamentals are changing and you are seeing that it's difficult for the stock to come rebound, yeah, you can take that decision. But most likely what happens during today's times is that it's purely panic selling, right? People are afraid that there is no tomorrow. People are afraid that stock market is not going to come back. They try to sell the stocks with whatever price. So at least they don't want to, lose all the money that they had invested. I don't know. I mean, I don't know the psychology of selling during such times, but I'm saying that could be the case. So during those times, especially when the situation is bad, where the fundamentals are strong. There is no evidence for the stock or for the business to go down. It's just a reflection of the overall market sentiment. So definitely, uh, fundamentals are actually in favor of you. You should actually accumulate more of those units, right? That's what seasoned investors do whenever an opportunity comes where everybody else is selling. They tend to buy. Warren Buffett has uh, the famous quote, right? You should sell when everybody is greedy, and you should buy when everybody is in fear. So that actually points out what I want to tell when not to sell the stock, right? Now coming back to the point of when to sell a stock, right? Actually, you purchased a stock and you purchased with good conviction, and you don't know when to sell it. I mean, purchasing decision is easier than selling decision. So I think the 3 points that what Rakesh Jhunjhunwala spoke about, and what I am going to reiterate the same, uh, is that the first point is you should sell when you need liquidity, when you need money. That's quite natural, right? I mean, maybe you are in that phase of your life where you need some money. So it's natural that you can, it's little urgent also, maybe. It's important, it's urgent. Obviously, during those times, you can maybe sell some of your stocks from the portfolio, depending upon your need, right? That is quite natural. That is point number one, when you are in need of money. Second point is something uh, that that's little hard to do, but when you see the stock that you had invested, uh, you think that the EPS, right, the revenue has reached the maximum. Basically, the company had reached a point from where growth will be slow or growth will be stagnant for a foreseeable future. You feel that EPS had reached uh, the saturation point, the revenue, the earnings per share had reached a point. At the same time, the price also reached the highest, like the valuation also reached its peak. Both EPS and PE both reached its maximum. You can imagine, right? Price is equal to EPS multiplied by PE ratio. That's what price. So you are seeing that EPS peaked, PE ratio also peaked, the valuation is also peaked. Do you think there is potential, or do you think the stock price can go up again significantly from this point? It's hard, right? I mean, business also reached its peak and P ratio also reached its peak. That is the time to sell the stock from the portfolio. But the question again comes here is, that's why I said it's a very tricky area. How do you know that EPS is peaked, or how do you know that the P ratio has been peaked, right? That is where you need to read a lot about the company, and you need to understand the overall economy, business, what's happening around that business. And uh, if you feel that the business the company is into is basically captured all the market share, and from here on maybe the company will grow, but not necessarily the way it was growing before, right? And at the same time, investors had already paid all the money, meaning they have already invested everything into it, causing the P ratio or the valuation of the company to go up. And again, the valuation, when you ask me the peak valuation, I would say for any stock, if it has surpassed P ratio of 100, 100 is too far away, I know, but for small cap companies, 100 is not a big deal. If the growth is sustainable, this P ratio of 100 can be justified. But like I said, EPS is already peaked, and if the P ratio is also crossing 100, it's already crossed 100, then you can say that it had reached an unsustainable territory, right? I mean, from here on, the jump in stock price will be minimal. There are innumerable examples if you take. One example I can see is that this is not directly linked, but I'm just quoting one stock. I don't know, you remember the rally that happened in Kalyan Jewelers, right? I think it happened last year. The stock rallied from 100 to 750, 780 range. Not even 100. I mean, if you actually look, the stock rallied from 60, 70 levels to 750, 780 levels. It had given 10x returns within a span of 1.5 years. That was like a massive rally. Here, what happened was, of course, the growth is there, but the PE is re-rated, right? From the stock was trading around, I remember 16, 17 PE ratio. From there, it crossed 100 at one point of time. So PE reached to a point where the price levels are unsustainable. EPS also reached a higher level. Of course, company is still growing nicely, but for that, the PE ratio already had reached an unsustainable levels. And that's the reason you can see that it had come down around 30, 40, or even 50% in the last few months. So from the all-time high, it is trading right now maybe 40% less, right? So one example is that there are a lot of companies like this where uh, both EPS and P ratio surged to a great extent, where you can see that from there on the uh, surge in stock price may not be significant. So whoever had exited from the stock, I mean Kalyan Jewelers, whoever had invested at 100 levels and exited at 700, 750 levels within a span of 1 year, they had got 7.5, 8x returns, and that's a good time to exit also, because the stock had corrected from the up, right? So why to hold on to that particular stock, seeing that both P ratio and EPS had peaked? You can use that money onto some other stock that shows some good opportunity, right? So that is my third point, where you should sell your stock when you are seeing good opportunities in the market. So suppose you invested into a stock, I mean, it's growing decent, it's growing well, and the stock price is also, returns are also decent. But you are suddenly seeing another stock where the potential is huge, where you understand the business model, fundamental looks strong, competitive management. Definitely, you can try to put some amount of money onto this particular stock. During such scenarios, actually, you can sell out some portion of the stocks that you are holding and put into a new opportunity. So these three points are extremely important. I mean, this will actually remove the uh, doubt on your mind on when to sell a stock, right? And that the decision making will be easier for you when you understand these 3 points, right? So personally, what I in my head, what I used to think is that forget about EPS, the second point, right? What I talked about. Forget about EPS peaking. When the stock is, say, for example, the valuation, starting valuation is 20 PE and it is crossing 100 PE, then those levels are unsustainable for me. As and when uh, the stock is crossing 100, I will maybe consider exiting that stock. Of course, a lot of other things to be considered. Sometimes what happens is there will be a one bad quarter due to some unforeseen circumstances. I'm not talking about exceptions, but otherwise, during normal scenarios, where sometimes market goes mad, right? That madness will kick in, and stocks will reach to a point where it doesn't make any sense to be in that range. I don't know, you remember the Nifty rally that happened after COVID. The PE of Nifty, the valuation of Nifty had touched 40 levels. I mean, 40 PE for an index like Nifty never happened in the history since Nifty has been introduced in 1990s, right? I mean, 1999. Since then, it was the first time Nifty PE was touching 40 levels. That is absolute madness. Like the market gone crazy. That was the time to sell, absolutely. That was the time to sell because if you see from that levels, Nifty had come down and stayed for the same levels for maybe 1.5 years. Only then it recovered, right? And parallelly the growth, the EPS also kicked in. So the price and EPS made justice to the P ratio. So I hope all the 3 points that I discussed on when to sell a stock is absolutely clear. Study thoroughly, understand about the business of the company that you are owning, and unless and until you don't need any sort of cash or you don't see anything outside of this, I would say you should not sell your stocks, right? I mean, it's very hard to get the entry price that you actually got when you purchase the stock. So hope it's very clear. One more thing that I want to tell you is that this is an uncertain time, not just in the stock market, in the real world also we are facing a lot of crisis in terms of LPG issues, uh, crude oil concerns, probably petrol price can go up in the coming days. I'm not sure. It's very unlikely, but it's a strong possibility, right? We can feel the heat in terms of LPG. Hotels are finding it very hard. In Bangalore, I can see that pain in hotels where things are not looking great. Hope the war ends soon, but until then, it's completely uncertain. And when it comes to stock market, sanity needs to be there. Don't do anything in rush. Stay quiet. If you don't want to do anything, stay quiet. It's completely fine. Just read what's happening around the world. Just understand the latest updates, and once you have clarity, then you know consider investing or whatever. I mean, buying or selling or basically participating in the market. Otherwise, this this should be a wait and see game. Uh, Market crash, I know, but there can be a possibility of even more sell off that can come. So the bottom is still not clear. I am seeing people talking about the market has already bottomed out, but how can we say that? I mean, in the sense that the war is still not concluded, right? In that sense, I feel like there is uncertainty still, which market doesn't like at all. So stay sane. If you're already invested, stay invested. I am already invested, so and I don't have any money right now to invest further. I don't want to also in the sense that what if those stocks go down even further, right? So until and unless you don't have a clarity, stay on the side. Hope you like this video, and if you are liking my content, again do subscribe to this channel. I will be publishing stock market related contents, and this direct stock investing series. It's not complete. There are few more things that I want to discuss on direct stock investing. It will continue. So yeah, wait for those upcoming episodes, and even after that, lot of plans around stock market investments and of course personal finance, mutual funds, everything. So I'm very interested in talking things around market, and do share these videos with people who likes market related content. I will come up with another video. Till then, take care.